Here's a detailed summary of Cisco's 2025 Q3 earnings call, focusing on key financial metrics, management commentary, and future outlook. Overall performance. Cisco delivered a strong third quarter for fiscal year 2025, exceeding the high end of their guidance for revenue, margins, and earnings per share. The company highlighted robust growth in annualized recurring revenue, ARR, and remaining performance obligations, RPO, indicating strong future performance. A significant highlight was exceeding their fiscal year 2025 AI order target a full quarter early, with over $600 million in AI infrastructure orders from web-scale customers, bringing the year-to-date total to over $1 billion. Key financial metrics. Total revenue, $14.1 billion, an 11% year-over-year increase. Product revenue, $10.4 billion, up 15%. Services revenue, $3.8 billion, up 3%. Networking revenue increased by 8%, driven by switching and enterprise routing, but partially offset by a decline in server sales. Security revenue soared 54%, primarily due to contributions from Splunk and SACE. Collaboration revenue grew by 4%. Observability revenue increased by 24%. Total ARR, $30.6 billion, a 5% increase, with product ARR up 8%. Subscription revenue, $7.9 billion, up 15%, representing 56% of total revenue. Total software revenue, $5.6 billion, up 25%. Total RPO, $41.7 billion, up 7%, with product RPO up 10%. Non-GAAP net income, $3.8 billion. Non-GAAP EPS, 96 cents. Non-GAAP gross margin, 68.6%, up 30 basis points year-over-year. Non-GAAP product gross margin, 67.6%, up 70 basis points. Non-GAAP services gross margin, 71.3%, down 30 basis points. Non-GAAP operating margin, 34.5%, above the high end of guidance. Operating cash flow, $4.1 billion, up 2%. Capital return to shareholders, $3.1 billion in Q3, with $9.6 billion year-to-date. Demand and orders. Total product orders grew 20% year-over-year, or 9% organically excluding Splunk. Enterprise product orders, up 22%, driven by double-digit growth in Americas and APJC. Public sector orders, up 8%, with growth across all geographies. U.S. federal orders grew double digits. Service provider and cloud orders, up 32%, driven by triple-digit growth in web scale. Networking product orders grew double digits, supported by web scale infrastructure, enterprise routing, switching, and industrial IT. Campus switching orders were up high single digits, with triple-digit sequential growth in Wi-Fi 7 orders. Data center switching orders, up double digits year-to-date. Security orders grew in high double digits, including a significant multi-year deal for Splunk security and observability platforms. AI infrastructure orders. Cisco surpassed its fiscal year 2025 AI order target of $1 billion a full quarter early, reporting over $600 million in Q3 alone. This brings the year-to-date total to well over $1 billion. The product mix for these orders was over two-thirds in systems, with the remainder in optics. This demand is driven by web-scale customers and is expected to continue growing as Cisco increases capacity. Management commentary. Chuck Robbins, Chair and CEO, expressed satisfaction with the strong Q3 performance, exceeding guidance across revenue, margins, and EPS. Emphasized the significant progress in AI infrastructure, surpassing the annual order target early. highlighted the strength of the core business driving strong cash flows and consistent capital returns. Noted that customers remain committed to technology transitions, particularly AI, with no observed widespread pull-ahead behavior related to tariffs. Reiterated Cisco's position as a leader in AI networking, citing key partnerships and investments, including with NVIDIA, and collaborations in the Middle East. Spoke about the fundamental importance of the network for generative AI, requiring ultra-fast, low-latency, and energy-efficient solutions. Announced organizational changes, including Scott Herren's retirement and Mark Patterson's appointment as CFO, expressing confidence in the future leadership. Scott Herren, CFO, provided detailed financial results, confirming revenue and EPS above guidance, with solid margins and operating cash flow. Detailed revenue breakdown by segment, networking, security, collaboration, observability, and highlighted growth drivers. Confirmed that Splunk integration is proceeding well and is now part of the company's run rate. Addressed tariffs, stating that current guidance assumes existing exemptions remain in place through Q4, with a plan to absorb costs without immediate mitigation. Provided guidance for Q4 and the full fiscal year 2025. Confirmed that the $600 million in AI orders from web-scale customers are primarily systems, as predicted. Future outlook and guidance. Q4 fiscal year 2025 guidance. Revenue, $14.5 billion to $14.7 billion. Non-GAAP gross margin, 67.5% to 68.5%. Non-GAAP operating margin, 33.5% to 34.5%. Non-GAAP EPS, 96 cents to 98 cents. Non-GAAP tax rate, around 18%. Full fiscal year 2025 guidance. Revenue, $56.5 billion to $56.7 billion. Non-GAAP EPS, $3.77 to $3.79. Significant risk factors. Macroeconomic uncertainty. While customers are committed to technology transitions, ongoing global economic uncertainties could still impact spending. Tariffs. The guidance assumes current tariff exemptions will remain in place. Any changes to these could impact margins. The company has incorporated potential impacts from July 9th into its Q4 guidance. Supply chain. While not explicitly stated as a current issue, managing supply for high-demand products like AI infrastructure remains a factor. Competition. The technology landscape is competitive, requiring continuous innovation and strong execution. Highlights. AI momentum. Exceeding AI order targets early. Strong demand for AI infrastructure from web-scale customers. Core business strength. Robust performance in networking, security, and collaboration. Financial discipline. Exceeding margin guidance and strong operating cash flow. Capital returns. Consistent return of capital to shareholders. Product innovation. Accelerating innovation pipeline, including AI-specific solutions and the introduction of new technologies, like the quantum network entanglement chip. Splunk integration. Successful integration and positive initial performance of Splunk. Partnerships. Strategic partnerships, especially with NVIDIA, are driving significant opportunities. Lowlights. Server sales decline, partially offsetting networking revenue growth. Services gross margin decline. A slight decrease in services gross margin. Civilian sector stress. Ongoing stress in the civilian public sector due to agency shutdowns and job security concerns. Important statements from CEO and CFO. Chuck Robbins, CEO. Q3 was another strong quarter for Cisco, with revenue, margins, and earnings per share all above the high end of our guidance ranges. We also generated solid growth in annualized recurring revenue, remaining performance obligations, and subscription revenue, which all support our future performance. In addition, we received AI in excess of $600 million in Q3, bringing our year-to-date total to well over $1 billion, surpassing our original fiscal year 25 AI order target a full quarter early. He also emphasized customer commitment to AI transitions and the company's strong market position in AI networking. He also announced significant leadership changes. Scott Herren, CFO. We delivered a strong quarter with revenue and earnings per share exceeding the high end of our guidance ranges, along with solid margins and operating cash flow. Total revenue for the quarter reached $14.1 billion, reflecting an 11% year-over-year increase. Non-GAAP net income was $3.8 billion, and non-GAAP earnings per share was 96 cents. He detailed the financial performance and provided guidance, noting that the Q4 guidance reflects the assumption that current tariffs and exemptions will stay in place. Transition. The call seamlessly moved from financial performance to demand drivers, AI initiatives, strategic partnerships, and then to forward-looking guidance. The leadership changes were announced by the CEO before handing over to the CFO for financial details, followed by a Q&A session that clarified questions on AI, tariffs, and customer demand. The call concluded with closing remarks from the CEO, reinforcing confidence in Cisco's AI strategy and market position.